All right, everybody, welcome back for another deep dive. You know how we do it around here. We take your suggestions for topics we dig in. And today, well, we're talking Bitcoin.
Always a hot topic.
Always, right?
Yeah.
And, I've been seeing this stuff floating around too about Bitcoin, and you sent in some really interesting articles, some data points, all this stuff. And it's got me thinking,
Yeah.
is this a bear market? Like, is this
Yeah.
it? Are we going down?
Well, it's the question on everyone's mind right now, especially when you see Bitcoin dipping below that 92,000 mark. It's a psychologically important level.
Yeah. I mean, it feels significant, right?
Yeah.
Like when you see it drop below a certain point, you're like, oh, uh-oh.
Exactly. And the stuff you sent over had some pretty interesting points about why this might be more than just a little dip.
Right. Well, let's talk about it. So one of the things that you sent over was talking about this fear and greed index.
Right.
And it's sitting at like 50, which is neutral.
Neutral.
Yeah.
Which, on the surface sounds fine.
Right. It's like, okay, in the middle, not too greedy, not too fearful.
Yeah, but here's the thing. You got to look at it in context. Bitcoin has been making these incredible gains lately.
Yeah, record highs.
All-time highs, exactly. So you'd think at a time like this, the fear and greed index would be like way up in the greed zone. Everyone would be like euphoric.
Right. Yeah, everyone's like to the moon.
Exactly. But instead it's just kind of like lukewarm.
So that almost makes it more concerning in a way.
Yeah, it kind of suggests that bullish momentum, that frenzy of buying,
Yeah.
that might be fading.
So it's not that people are like, oh my God, it's crashing. Is that they're just not as excited.
Right, exactly. And that can be a sign that things are about to turn.
Interesting. Okay, so we've got that. And then there's this whole thing about Bitcoin falling below 92,000.
Yeah, and it's not just that it fell below it, it's that it dropped pretty significantly, like more than 5% in just a week.
And that's a big deal because
Well, it's a big deal because of these things called support levels. So imagine, you've got a building and it's got all these different floors, right? Each floor is kind of like a support level for the building.
Okay.
And in the Bitcoin world, those support levels are prices where buyers tend to step in. They see Bitcoin dipping down to that level and they're like, all right, this is a good deal. I'm going to buy some. That helps prop up the price.
I see.
But when the price crashes through a support level like it did at 92,000, it's like one of those floors collapsing.
Oh.
It spooks people. They start selling. And that can trigger this whole cascade effect where the price just keeps dropping.
It's like a domino effect.
Exactly. One floor goes down, then another, then another.
Okay, yeah, that makes it a little bit more clear why that's such a big deal.
And then, on top of all that, you mentioned the source talking about this perfect storm of macro factors.
Yeah, and that's what I was thinking about too, because, it's not just what's happening within the Bitcoin world itself, but it's all these things happening in the wider economy.
Right. You got rising interest rate.
You've got inflation concerns.
Yeah.
We've got, the job market is doing really well, which sounds like a good thing.
Right. But it also means that the Fed might not cut interest rates anytime soon, which usually helps stimulate the economy.
So how do all these things come together to impact Bitcoin?
Well, it's all about risk. When you see interest rates going up and inflation worries and the possibility that the Fed's not going to step in and make things easier, people start to get a little bit more risk averse.
Right. They're looking for safer places to put their money.
Exactly. And Bitcoin, which is seen as a riskier asset, starts to lose its appeal.
It's almost like people are thinking, okay, let's go back to the basics. Let's go back to things that are a little bit more predictable.
Exactly. And then on top of all of that, we got the trading volume situation.
Yeah, I got to be honest, I always get a little confused about trading volume, like what it actually means and why it matters.
Sure. So trading volume is basically just a measure of how much Bitcoin is being bought and sold over a certain period of time. And what's interesting here is that the 24-hour trading volume for Bitcoin has dropped significantly, like something like 34%.
Down to 3.82 billion?
Yeah.
Yeah, that's a pretty big chunk of change.
It is. And you might think, okay, well, maybe that's just because the price is going down, fewer people are interested. But here's the thing. You'd actually expect to see higher trading volume during a dip.
Really?
Yeah, because usually when the price drops, you get all these bargain hunters coming in trying to buy Bitcoin at a discount. So if the volume's low, even when the price is down, it's like those bargain hunters aren't even biting.
Interesting. So it's like even the people who usually see a dip as an opportunity are getting a little hesitant.
Exactly. It's like they're not sure if this is a good deal or if it's just going to keep dropping.
Okay, that's pretty spooky when you put it that way.
Yeah.
And then there's this thing about elevated exchange reserves, which sounds like we're talking about some kind of like doomsday bunker.
Right. Well, it's not quite that dramatic, but it's definitely something to pay attention to. So exchange reserves are basically the amount of Bitcoin that's being held on cryptocurrency exchanges.
Okay.
And when those reserves are elevated, it means there's a lot of Bitcoin just sitting there ready to be sold. It's like a
Oh.
big dam holding back a ton of water.
And if the dam breaks?
If those holders decide to sell all at once, it could flood the market and send the price plummeting.
So it's kind of like a ticking time bomb.
Well, you never know when or if it's going to go off. But it's definitely something to keep in mind.
Yeah, okay, so we've got the low trading volume, we've got these huge exchange reserves, and then just to add another layer of like uncertainty on top of all this,
Yeah.
we have all this stuff happening with regulations.
Oh, yeah. 2025 is shaping up to be a big year for crypto regulations.
Yeah, I mean, you've got Australia, the UK, Brazil, South Korea, all these countries are like, all right, we got to get a handle on this crypto thing.
Right. And regulations can be a good thing in the long run. You know, they can bring more stability and legitimacy to the market.
Yeah, it makes people feel a little bit more secure about investing.
Exactly. But the problem is that in the short term, regulations often create a lot of uncertainty because nobody's really sure how these new rules are going to play out, how they're going to impact the market.
So investors are kind of like holding their breath.
Yeah, they're like, wait and see.
Yeah.
And that can lead to more selling pressure, which can push the price down even further.
Okay, so we've got kind of a trifecta of uncertainty going on here. We've got the economic uncertainty, we've got the low trading volume and high exchange reserves, and then we've got this regulatory uncertainty.
Yeah. And then just to add one more thing to the pile.
Of course, why not?
You mentioned that the source talked about a weakening market structure.
Yeah, and I was reading that and I was like, okay, what does that even mean?
So basically it means that the overall health of the Bitcoin market is starting to look a little shaky. There are a few signs of this. One is that Bitcoin's price is currently sitting well below its recent highs.
Okay.
Another is that we're seeing declining trading volume during rallies. So even when the price tries to go up, there's not a lot of enthusiasm behind it.
Like people aren't jumping in to buy.
Exactly. And then the third sign is that there's increased selling pressure at resistance levels.
And reminder, resistance levels are...
Those are price points where Bitcoin has historically struggled to break through.
Right.
So when you see increased selling at those levels, it means that the sellers are really strong. They're not letting the price go up very easily.
So basically all the signs are pointing to the fact that it's getting harder and harder for Bitcoin to gain any momentum.
Exactly. The buyers are losing steam and the sellers are in control.
That's not good.
Yeah, it's not a great sign. But, you know, it's important to remember that markets are cyclical.
Right. They go up, they go down.
Exactly. And just because we're seeing some bearish signals right now doesn't mean that Bitcoin is doomed forever.
Right. It could bounce back.
Absolutely. And you know, we've covered a lot of ground here today, but I think the most important takeaway is that you got to stay informed. You got to keep your finger on the pulse of what's happening.
Yeah, and don't just take our word for it.
Exactly. Do your own research. Look at the data.
Stay curious.
Exactly. And most importantly, think for yourself.
Don't panic.
Don't panic.
Right.
Right? Just because things are looking a little shaky right now doesn't mean you need to sell everything and run for the hills.
Right.
Take a deep breath, assess the situation, and make a plan.
That's such good advice.
Yeah.
I think that's a great place to end it. You've given everyone a lot to think about.
Hopefully. Yeah.
And, you know, as always, if you have questions, if you have topics you want us to cover, let us know. We're always happy to dig in.
Always.
So until next time, happy investing, everyone.
See ya.
Happy investing.
Bye.